Hello and welcome to the closing beat, everybody. Happy Wednesday. Week is just flying by, isn't it? I love it. I love it. I love it. Well, thank you for watching here. We talk about the stock market and everything here. We're financial advisors. Hope you'll check us out at jazzwealth.com. We're a little offbeat, but helps, let you know we're just normal people, normal dudes and girls up in here. Happy to work with you. And so if you have a rollover, Roth IRA, anything, you're working with an advisor, you don't like them, maybe check us out at Jazz Wealth. Summertime tends to be a little quiet as all our clients go on vacation, I presume, out there spending their dough. So if you want to schedule a call or something, go right to our website. As far as the markets go here today, let's bump around and take a look, see what's going on. Here's the S&P on the charts here. We are obviously moving just a touch higher. It was kind of a choppy day overall, which you'd expect because we're moving higher on slowly decreasing volume, getting into that summertime season there. So to me, a little bit suspect about diving in now if you want to participate with less people that are bullish. Seems like everybody got excited the other day, and that's where we stand. The Fed has decided to skip this rate hike here. We're all looking for the word pause, and they said, gotcha, and they went with the word skip. Well, skip is like if you skip your car payment, you're not done with your car payment. You just pick it up next month, right? If your bank allows you to skip it or for whatever reason you skip a payment, right? Say it's your kid's birthday and you finance their car and you're like, yeah, skip this payment, kid. I'll pay for it. But the next one, come back and make your payment. So that's the assumption of what was happening here today. The 10-month streak ends, or 10 Fed rate hike streak ends, not 10 months. But likely we're going to see at least one more rate hike this year. Currently, if you look at the Fed, what's called the dot plot, which is just basically a visual representation of what they're all thinking. Looks like maybe we've got either two more rate hikes or one 50 basis point rate hike or 0.50%. So we'll see. Interestingly, it was just 1 year ago to this very day that the S&P was entering a bear market. That means down over 20% from the highs there. The Fed was on there and continuing on their streak of raising rates at 0.75% a shot. They did that 4 different times, all in a row there to rapidly raise rates. The NASDAQ, if you want to take a look over here, the NASDAQ was actually down over 30% at that point. The Russell at that point was down about 23%, and the Dow was down about 15%. We look at inflation. Inflation's now 4%, which probably can't read that, but that says 4.05%. It took us 14 months to get all the way to the peak of 9.1%. And at this pace, the current pace of 0.1% growth month over month, we would actually be under 2% 14 months. It would go exactly, that's never happened before. We've gone up and peaked and come down at the exact same pace. So we have rapidly declining inflation. However, remember, that doesn't mean prices are going down. I talk to so many clients that are like, cool, prices are going to come down. No, prices are going to go up at a slower rate. Previously, prices were going up at 9.1% a year. So presumably, if that stayed the same and you just keep hoping for prices to come down, they'd actually gone up by 9%. Well, now they're going up by about half of that. So prices don't necessarily have to come down. All of you waiting for those real estate prices to come down, maybe commercial real estate, but even we could combat that a little bit. So just a heads up. I mean, it's a good thing either way. So inflation cooling, looking a little bit better there. Of course, we're happy to see that. Now, if you go on over to the S&P, let's go back. The S&P, this rally here, a little bit more meat on the bone. And I say it that way because last 30 days or so, we actually have all sectors playing along. And I've tried different ways to share this with you. I'm going to try something different here today. Here is really up to date, right? It's current. If you look back, previously what we had, as illustrated by that beautiful dashed line, is most of the sectors trending lower, but just a couple rapidly trending higher. And coincidentally, those sectors, tech and communication services, have the biggest say in the S&P. So if they go up a quarter, the S&P, or if they go up 1, the S&P would go up a quarter, right? So it's like that much say. The rest of these sectors didn't have much say. So they were all bleeding lower, and we were pointing out like, hey, look, the actions in all the tech stocks there. That's what everybody's excited about, but that doesn't mean you want to participate in the broad market. Now look over here. That's about a month or so. Over the last month, almost every sector is participating higher. Energy is the only one that's still trying to make up its mind, but everything moving higher, and still those big sectors up there at the top that have a lot of the say. So that's why we now have the stock market as a whole able to just do its thing. You know what I mean? Everything's participating. It's very difficult, as you see back in here, right? This is when only tech and communications were going higher. The market can stay up at the highs, but it can't quite give you that blast-off rally till everything starts participating. When everything participates, and it helps that you broke a technical place there as well, that certainly helps. We can further solidify that by looking at the 1 month performance in terms of the contribution that an individual stock made to the index. So for example, over the last month, the stock market is up about 224 points, somewhere in there. I didn't catch the actual last number, but of those 224 points, 36 are purely because of NVIDIA. In other words, if NVIDIA didn't exist, the stock market would actually be up 36 less points, assuming there's no other stock that took its place. Tesla accounts for 28, Microsoft 22, Apple 19. Remember before when I shared this with you, I'm going to just look back briefly and see if I can by chance find it. I may have overwritten it there, but I do like to keep stuff. Let's see what this says here. Oh, here we go. Before we were looking saying, oh, wow, look, of the entire gain, the 149 points, all of it came from these names, all of it, every last bit of it, right? So now we have a whole different scenario, and that's just another way to kind of show, yeah, look, I mean, these guys are doing great, we're not complaining, but everything else, for the most part, is helping kind of move things higher. So really cool to see that, and that's why you have that rally there. So kind of putting the pieces together for you. Let's go to the Dow here real quick. There it is. So the Dow in a similar position today. United Healthcare was really the single driver of all the underperformance today. So United Healthcare is, I believe, still the most expensive stock in the Dow. Now the Dow is a little bit different. The Dow behaves in a way that says if your stock price is higher, whoever has the highest stock price has the most say. Whoever has the lowest stock price, I think it's Salesforce maybe. No, it's not Salesforce. I'll have to look it up. Whoever has the lowest stock price actually has the lowest say, right? So if we go over to the Dow, you have one stinking day here where the, oh, I've almost got it here. Hold on a second. So who's the lowest price stock? Price. Walgreens, Intel, right? So we would say it's in that camp, right? So look at United Healthcare, $4.59, Intel, $35. Intel can have it. See the day it had today? It can have this type of great day, a 5% just out of nowhere, like zero impact on the Dow because it's such a low price stock. So it's called a price weighted index there. And so basically today, all the underperformance came from United Healthcare. We'll talk about that in just a second. With the Dow, you have something really interesting going on here. It is the same as what I shared with you before, except we were talking about the S&P 500. Now let's talk about the Dow. So on the chart here, the x-axis is your 1 month returns. In other words, you've got zero right smack almost in the middle there, right? So everything to the left is performing poorly over the last month. Everything to the right, of course, is performing positively. On the y-axis here, we have your performance year to date. So everything above my cursor here is performing positively, and everything below is negative. What do we do with that? Well, I put a line there just to kind of illustrate, but what has been weak year to date, see, is also weak for the last month. What has been strong year to date, everything towards this end over here, has also been strong this month to varying degrees, right? And so what that tells you is people don't want to guess. They don't want to pick on the current dogs of the Dow, right? It's not the official way to do it, but they don't want to pick on the dogs of the Dow. They want to pick on those that are doing well. So in other words, momentum. Momentum is what's driving the Dow outside of today. You have one stock like United Healthcare, of course, that can ruin the whole thing there. Speaking of United Healthcare, we'll talk about that. The main gist of what they're talking about is their medical procedure reserves, or their elective medical procedure reserves. I've had back pain. Oh my gosh, I need a back surgery, but that COVID thing, I'm not going to go into the hospital. I'll just wait and tough it out. Well, COVID's gone. And so over the last year and a half, 2 years now, it's like, okay, I'm going to go have that elective surgery. Not only that, during COVID, they were just pushing out elective surgeries. Remember all of that? It's like a bad dream, right? So United Healthcare is saying, whoa, okay, everybody's coming in for that back surgery, fix my knee, things that have come up that you have to have addressed. And so their the elective medical reserves is likely going to come in at the high end of their expectations. So every little category in that company, they ballpark a range of what they expect to spend. They said it's going to come at the high end of those end of that range, and we expect that to continue. So that's your reason for such a tough one there in terms of their performance today. Well, before we move on, let's go over here. Let's take a look at a couple other things. So you got gold continuing to pull back. What good is gold if inflation is rapidly falling there? So hopefully nobody fell for that. Spent a lot of time talking about that, trying to convince people not to. We even had a couple clients say, no, that's it, man. I'm going to buy myself some physical gold. You have lost quite a bit of value in that gold, so I hope after some time it takes off. Energy, or oil, I should say, was strong yesterday, but not strong overall. Today, basically flat, 1% down, just basically stays in this downtrend here. Remember, oil itself, this is the oil futures contract, very difficult to fight the trend. It'll turn at some point, right? It always does, but it's very difficult to pick that turn in the trend. A lot of times you can get kind of smart and creative and stuff with individual stocks, and if you do it enough, you're like, that's the top. I mean, I'm close, within a couple percent, I know I've got the top. Same with the bottom. Oil, trust me, from experience, I can tell you that's a different story there. Let's talk about a few stocks here. We talked about United Healthcare, the equivalent of Budweiser, AB InBev. It's not an American company, so which a lot of people don't know, but so that's why you see the gaps on the charts. This is just replying to what the performance was like overseas. That's why you see the gaps on the charts there, because it's resetting when our markets open. Bud Light, officially no longer the #1 beer out there, but that should be no surprise to those of you that follow the show. We talked about Memorial Day sales, and we could really see that the efforts that have been made to get Modelo to be the most popular one were paying off. Those were the exact words we used here, is to say, I don't know who's buying it. I don't seem to recognize it being too popular around here, but their efforts, all their marketing strategies, their campaign, they're focused to make that the #1 beer. Probably a little creative timing there, but that paid off. Modelo is officially the #1 beer. They have 8.4% of the U.S. market, whereas now Bud Light, you can see their poor performance over the season there, over the holiday weekend. Bud Light's at 7.3%, so they come in as second place there. Now, I believe that is only the second time in history for them, so we'll see what happens. I'm sure you guys will have lots of comments. Have at it. Alphabet. So their AI is Bard, and we have access to play with it here in the U.S. But over in Europe, they've said, no, we want none of that sorcery. We want to just leave that out. So they have been blocked from launching Bard in the EU. We talked about United Healthcare. You know that one there. And otherwise, a pretty light news day. Everybody's focused on the Fed. Palo Alto Networks is going to be taking the place of Dish Networks in the S&P 500, and that starts on the 20th, which is next Tuesday. Hey, our Jazz After Dark's been pretty cool. I love doing those for you guys and hanging out and just kind of talking about whatever comes to mind. We did 4 retirement tips for those of you that are over 50, but really, somewhere in there where retirement's really sort of becoming a clearer picture instead of like the kids that just have this fuzziness of can't picturing that they're going to get old. We've done retirement tips as your income grows, so that one's good for all ages there. Done all kinds of stuff. Hey, can you buy sunscreen with your HSA? Let's just go through some of that stuff, and that's what we use our evening shows to do, so I hope you'll check that out. I appreciate you guys watching and supporting and everything. Other than that, that will take us into the final days of the week. The stock market is closed next Monday for the second year in a row the
Juneteenth, and I believe we're going on 3 years in a row.
Is this the third year?
I think so, right? COVID? I think it happened during COVID.
Oh, maybe COVID. Yeah, that's true. Okay, so maybe the third year in a row. But the stock market is closed, so we'll just be here, doing work and kind of setting up, playing with all this new stuff here. Make sure we can bring you guys a great stream, but there'll be nothing to talk about for the stock market, so you just enjoy that. But we'll see you tomorrow. Talk about this great stuff all over again, and enjoy the rest of your day. See ya.